What's up, my friends? Hello, dear traders. Welcome to Olymp Trade. My name is Angie, and today we are going to talk about Fibonacci. We are going to take a look at how to use the Fibonacci retracement levels. Likewise, we'll briefly discuss what exactly is Fibonacci and why these numbers are important. Because I personally believe that it is important to understand a little bit of history, otherwise you won't feel the full power and beauty of this indicator. My friends, let's first quickly check the sound and the picture. Please let me know if in chat if you can hear me and if you can see me well. Let me know where you're from. Just give me a shout out or just put a plus sign. In the meantime, I do want to remind you to please make sure that you are subscribed. Show me your support and give me a thumbs up, and likewise ring on the bell to receive important notifications. And don't forget that we also have social networks, so check us out on Facebook and Instagram as well. My friends, I want to let you know that today Alex is in chat with me, so you are welcome to ask your questions and share your comments related to the topic. And likewise, don't forget that you can share your thoughts and opinions in the comments section below this video. Alrighty, let me just make sure. Dinesh, thank you so much. Bom dia, Rodolfo. Hello. Thank you so much for the confirmation and the greetings. By the way, my friends, there is a poll in chat that we're going to discuss throughout the webinar. So go ahead and participate in that. I do see a lot of interesting replies, and actually, the leading percentage number is not the correct reply. So it's going to be interesting to see who. For you to find out the correct answer. So what we're going to do is we are going to start with a short presentation and a little bit of an explanation about what is Fibonacci, and then we'll look at the price chart as well. Alrighty, so the Fibonacci sequence was named after Leonardo Pisano. In English, this is Leonardo of Pisa, originally named Leonardo Fibonacci. Leonardo Fibonacci was an Italian mathematician during the medieval 12th century. Imagine that. He introduced the Hindu-Arabic numerals to Europe and also to the Western world, which gradually started to replace the Roman numerals. So these are the Hindu-Arabic numbers that we are used to and that we use today. And these are the Roman numerals. Also very interesting. So the Fibonacci sequence is as follows. It's 0, then 1, then again 1, 2, 3, 5, 8, 13, 21, 34, 55, 89, 144, and etc. The idea here is to add the first two numbers, which equal to the third number, and then you repeat. So as you can see here, let's see, 0 plus 1 is 1, 1 plus 1 is 2, 2 plus 1 is 3, 3 plus 2 is 5, 5 plus 3 is 8, 8 plus 5 is 13, and so forth and so forth and so forth. So this is like a really cool sequence. So in this picture, you can actually see the Fibonacci, how the Fibonacci sequence looks in dimension. So this is a mathematical sequence that is seen throughout the whole world and trading as well. So now you might ask me, so how does the Fibonacci sequence and the Fibonacci indicator come together? The thing is that Fibonacci retracement levels can automatically identify support and resistance levels on the price chart. We should all know that support and resistance levels are very important when trading. We kind of touched up on this during our webinar last week when we spoke about price patterns. And so these are these areas of support and resistance. So these areas can be identified by slanted lines, which is called trend lines, or horizontal lines. These are, once again, potential levels where the price may stall, stop, or reverse. If one of the levels of support or resistance, if they are broken and the price moves beyond them, then the next level can become an important area for a stop or a reversal. The cool thing is that Fibonacci Fibonacci retracement indicator automatically applies several sets of corresponding levels of support or resistance. They are automatically applied, but you do have to set the points of the indicator, which of course we'll get to this in just a moment when we get to the price chart. So our most important targets on the Fibonacci retracement levels are calculated by dividing Fibonacci sequence numbers, except for the 50%, which is basically like the halfway point. And then we also have square roots of the Fibonacci numbers, where square root is where you multiply the number by itself. So the 23.6% Fibo level is 13 divided by 55, which forms the 0.236 Fibonacci level. This would be our first level of support or resistance, which of course, once again, I'm going to show you in just a moment on the chart. The 38.2% Fibonacci level is 13 divided by 34, which forms the 0.382. Once again, like I mentioned, the 50% is the halfway mark. 61.8%, very important number, is 13 divided by 21, which is 0.618. And then we have 78.6, which is the square root of 0.618. And then 88.6 is the square root of 7.86. Alrighty, so the really cool thing and very important part to know is that we have the golden ratio in our Fibonacci indicator, and this is the 61.8% Fibo level. Pay attention to the poll in chat. The golden ratio is also sometimes called the golden section, golden mean, or divine proportion. It is displayed as the Greek symbol phi. Now, this may sound a little bit confusing, but just so that you understand, the golden ratio means that the ratio of the sum of the quantities to the larger quantity is equal to the ratio of the larger quantity to the smaller one. So basically, it means that A divided by B is going to equal to the same number as A plus B divided by B. So both of these equations will equal to the same number, which forms the 61.8% golden ratio, which is 13 divided by 21. It's going to, you can check out your calculator, and just divide 13 by 21. And then try this out. 13 plus 21 divided by 21 is going to equal to the same number. So another thing that's really amazing about the golden ratio is that it has been observed throughout history in things like geometry, art, architecture, and nature as well. So if you guys are interested, I would highly advise for you to search for something like Fibonacci photography or Fibonacci in nature, where you will find and you can look at some amazing things. The golden ratio is actually also in the human body. For example, in our face, the length of the human arm, and our hands. Alrighty, so now let's go ahead and switch back to the price chart. So this is where we're going to get, it's going to get a lot more interesting. Let me go ahead and switch to gold right here. So whenever the price is trading close to one of these levels, I'll show you how to apply this in just a moment. But whenever the price is trading close to one of the lines, so one of the levels, we can expect a few things to happen. One is that the price may stall and it may travel sideways. The price may bounce and start moving in the direction of the previous trend. Or the price may break through one of the levels and move beyond them, and move on to the next level of support or resistance. Here, I want to mention a very important thing. So take note that if the price breaks the golden ratio, the 61.8% Fibo level, the trend direction is most likely with high probability changing direction. So that is the answer to the poll question in chat. Kind of looks like everybody 50, like same percentage, everybody replied to 23.6, 30.2, 50, and 61.8. But at the end of the day, 61.8% did win with 29%. Whoop whoop! Great job, my friends. Great job. Thank you so much for participating in that. So let's take a look at how to apply the indicator. Okay, let me go ahead and delete it. you can find it in the indicator section. Just scroll all the way down to drawing tools, and right here you can choose Fibonacci levels. So if you are looking, for example, at an uptrend, right? And the price has reached a level of resistance, and the price starts to correct. Remember this, that the price can retrace and move in the opposite direction by a third or a half of the previous price movement before resuming its movement in the main trend direction. That's where the 38.2 and the 50% Fibo levels come in. Here so if you're looking at an uptrend, here you would connect the price from the lowest low of where the uptrend started, and simply extend it up to where the price reached, to the high where the price reached the level of resistance, and start correcting. Okay, so automatically, here you go, voila, the Fibonacci retracement is going to identify potential levels of support. And we'll discuss this a little bit more in just a second. Okay, so remember, if you're looking at an uptrend that started correcting to the downside, you have to apply it from the low, from where the trend started, to the maximum where the trend ended. Now here, I do want to take note that technically you should apply, well, not technically, but you should apply the indicators from the shadows, from the peaks. Okay, some traders actually apply them at the bodies. But if you apply the indicator, the Fibo levels, from the body here, you also have to apply them to the body here as well. I usually stick to the shadows, but just an FYI, for your information, you can try out this as well. I would actually recommend for you to practice. I mean, it's not going to cause anything on the chart for you, so just apply them on all kinds of there are different assets, a lot of different situations going on in the market, so definitely practice and check it out. Let's see here, and now we're going to look at euro and the Australian dollar. Now here is here we have a downtrend, okay, that is correcting to the upside. By the way, last week we discussed price patterns. This is a very interesting one. We see like a level of resistance. It's not ideal. This is almost like an evening star. It's not ideal because the small body candle in the middle, it did not open up with a gap. But still, look at that. This candle did close below the middle of this the first candle, and look at that downside momentum, my friends. Alrighty, so back to the Fibonacci indicator. So here we go again. If we are looking at a downtrend that started correcting to the upside, okay, so we have a retracement, you would simply connect the first peak of where the downtrend started and extend it to the downside where the price started reversing. And once again, what you can see is potential areas of resistance. Look at how the price, so basically all of these lines, they show us levels of support and resistance. And remember that the most important areas are the 23.6, the 38.2, 50%, followed by 61.8%. So what can happen is that the price, so what are we looking at? How can we use the indicator? What can happen is that the price can reach the 23.6% level. It can reach it and start moving again with the direction of the main trend, or it can break this level and move to the next level. And this is an ideal situation here as an example. So the price broke the 23.6 and reached this level of support at 38.2, and then dropped back down. See how it reached here? And now it's moving kind of sideways. And right now the price is actually using the 23.6% Fibo level as a level of support. So two things can happen. If the price starts moving down, it can continue with the main trend, or it can spike back up to potentially this area. So levels of support and resistance there should always be referred to and be used as an area. So it's not going to be ideally this, although it does quite often happen that it's, you know, quite ideal, but you have to understand that it's this area as well. Here again, I just want to one more time mention, let me go ahead and switch back to gold so I can show you. So I can show you this example. So what happened with gold? So reached the level of resistance, dropped below the 23.6 level. It used this level as a an area of resistance. Then it dropped to the 38.2% as support. Then it broke this level of 38.2, and then kind of for quite some time, for I think several weeks, it moved kind of sideways and used the 50% as a level of support. Although it did try to break it several times, and right here it even spiked down to the 61.8% Fibo level as a level of support. Then we had a mini uptrend. See, it broke the 38.2% level, reached the 23.6 level as a level of resistance. Here it used the 38.2% level as support, and then it broke down. Look, 50% level again as a level of support, broke down, used this level 61.8% level, and now it has broken the 61.8% Fibo level as well. So technically speaking, although the situation on the market is iffy, there's a lot of things going on. Technically speaking, since it broke the 61.8% Fibo level, this uptrend is currently no longer active. So a lot of times, if it breaks the 61.8% level, although look, it's using this level as well, so you can leave the Fibonacci level on the chart, but technically speaking, if it breaks the 61.8 level, you can go ahead and delete it. Now, my friends, I want to show you another way that you can use the Fibonacci retracement levels, the indicator. So let's say that let's look at natural guess. Let's say that the price has reached a historic high or a historic low, and you have no past data to form your resistance and support levels. What you can do is apply the Fibonacci retracement indicator upside down. So as for example, in this case, if the price has reached a historic high, a resistance level, then you can apply the Fibonacci level from the top to the from the high that is created to the low of the previous trend movement, and the indicator will apply potential future levels of resistance. Let me go ahead and show you how that's done. So once again, Fibonacci levels. So it's just on the rise. So let's just take this high right here. We're going to drag it down to this low right here, so where the uptrend started. And what you can see is you are going to see potential future levels of resistance. Okay, so basically it's just the opposite. So basically, let me just show you one more time. If we have an uptrend that's starting to correct down, then you would connect it from the low to the high. If you want to see potential future levels of resistance, then you would connect it from the high back to the low. Pretty simple, my friends. Let me show you this interesting situation right here. Euro CAD. So once again, this is like the flip side. Here's another pattern right here that started a down movement. So once again, we take our Fibonacci levels. So let's say the price has reached a low, and there's you know, like a historic low. What you would do is you would connect it from the bottom to the top instead of from the top to the bottom. Okay, and now once again, you have potential future levels of support. Let me just show you this cool thing right here. I'm going to mark this level that the Fibonacci level gave us. And I'm going to switch to a higher time frame, the weekly time frame. As you can see, the price used this level, although it hasn't been there for quite some time. The price used this level back in 2015, my friends. Okay, that was a very long time ago, but it did use this level that the Fibonacci gave us back in 2015. So it does work. Fibonacci is amazing. I love Fibonacci, just like I love the Ichimoku cloud. So my friends, do you have any questions? Maybe you would like for me to look at a certain asset and apply the Fibonacci retracement. If so, please let me know which asset in chat and also the time frame that you want me to look at. Let's see here while I'm waiting for your replies. Let's see, non-average. So how do you choose the starting point? Couldn't you have gone back farther in the chart to find a high point? It's so once again, you apply them. Let me just go back here. Where the trend, oops, where the last trend started. Okay, so technically you can, just looking at this, like you can apply them here. The thing about Fibonacci, it is a drawing tool. So the way that you apply it really depends on you and your trading idea. But if you apply the Fibonacci level and during the retracement, it once again, let me just show you. Let me find a better example. So basically, okay, let me try and explain like this. If you apply it here and drag it down, if during the, it should not break the 61.8% Fibo level before the retracement. Okay, so basically just remember, you apply it at the start of a downtrend, at the high, the start of a downtrend, and drag it down to the last point where the price started retracing, or the other way around. So the trend started here, this uptrend right here, and you would apply it here and drag it up to the upside. Euro US dollar, 1 minute please, and 3 minute. Okay, so another thing that I do want to mention is that first of all, the Fibonacci indicator should be used during a trending market, not in a flat or a sideways movement. So it's very important in order to apply them, for there to be some movement either up or down. If it's moving sideways, then you basically can't apply the levels. As far as Euro US dollar on the 1 minute time frame, the Fibonacci indicators are much more reliable and useful on higher time frames, just like support and resistance levels. So the higher the time frame, the stronger the level of support or resistance. So Olymp Trade win tricks, I'm going to go ahead and check that out. I think 30 minutes is not bad. Basic dollar index, 30-minute time frame. Okay, so this is like I guess an example. So would you start at the Fibonacci level here and drag it down, or would you start it here and drag it down? It should not break the 61.8% level during the movement of the trend. Okay, so here I would apply it right here. I think I was actually looking at this. As you can see, the level it reached the, like for example right here, although I do see some spikes, but during this down movement, if the price broke this 61% level to the upside right here and closed above it, like we see some candles, and then started moving down again, that should not happen. So you can see that, yes, excuse me, 30 minutes ago, the level was used at 38.2%. Right now, it's kind of iffy. We do have the FOMC meeting a little bit later on today. But yeah. Alrighty, so I don't see any other currency pairs in the chat. So my friends, dear traders, I do hope, first of all, thank you so much for joining in today. I do hope that I provided you with some useful information about the Fibonacci retracement levels and that you will be able to use this indicator with confidence and to make a profit. I do so once again, I want to remind you to please make sure that you are subscribed. If you enjoyed my lesson, please give me a thumbs up and don't forget to ring on the notifications bell. And likewise, once again, I want to remind you that we have social networks, so check them out, Facebook and Instagram. Obviously, you're already on YouTube. Once again, my friends, I want to thank you so much for tuning in. My name is Angie, and I will see you next week. Bye-bye.